Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 6th of January 2023. Welcome to the new year. First chart is the US Dollar Index Futures, as usual. You can see that down here, the last 3 weeks have all seen quite low volumes, so they're less significant than what you might normally see in this market. Put some lines in so you can see where we are. The price is holding on around this level, albeit only just. Now this week's bar, looks very ominous, but on relatively low volume, it's less significant, or it's likely to be less significant. It may still prove to be, but at this point, it's hard to know. If it was, I would expect price to come down and test this level for strength. This is the lows of this range here. However, volume being perhaps 50% of what it normally is, you can often get some wide spreads on low volume trading. The market can be moved around on lower volumes more easily. This bar and this bar were the two bars with the higher volumes recently. So I marked the low of this bar, and I think that's the level we need to watch at the moment. We'll see pretty quickly now, because volume should return closer to normal from next week, and we'll see pretty quickly what the actual market sentiment really is. Now, the market didn't really stretch lower at all over this period here, so while this looks pretty bad, I would just take it with a pinch of salt just at the moment because of the volume, because of the lower volume, and we'll just see what the response is early next week. Now, if volumes are back to normal, almost certainly the market will attempt to test for supply next week, something like this. And that's early in the week. And then it will depend then on how much supply is actually drawn out and how the market initially moves. If selling pressure is relatively low, the market may attempt to push higher. If supply continues to be drawn out, then I would expect the market to come back, challenge those sellers, and push lower. Next chart is the E-mini S&P. This is S&P 500 Index Futures. You've got the lows of the range down here. This is the most significant bar at the moment here, and you can see the market's held on to this level. It hasn't stretched lower at all. It's been absorbing supply. It's an attempt to absorb the weakness in the market at the moment. Volumes have been relatively low, below average, perhaps a little higher in the US dollar index futures. So at least 3 weeks ago and last week were at the 50% level or a little more. So not totally insignificant. We'll just see how the response is next week, when I expect volumes will come back closer to normal levels. But there's no doubt there has been an attempt to absorb the weakness in the market recently. This market could easily have drifted lower on that low volume, but it hasn't. It's moved sideways, and it's respected the lows of this high volume bar here, which is generally a good thing. It leaves the market well positioned to continue higher if selling pressure remains relatively low and trading conditions remain favourable. Next chart is the US Treasury 10-year note futures. Here's the highs of the range up here. This is where resistance currently sits, and price back here pushed above the lows of this bar after some buying support came in below that level. Price pushed up to this 115 level, or just below 115, but thereabouts. And now price has come back to the highs of this breakout bar and are effectively testing it for strength, and it appears that the strength remains in place, and I would expect the market will test this level again next week. Copper price futures have some buying support in the background through here. Price broke out from that level. There was a period of consolidation which was a little deeper than was perhaps ideal, but that's what it is. Price has then moved back closer to the highs of the range and are consolidating again at a much higher level, and that looks much more promising for the future. The previous breakdown line is up here, and the zone probably lasts to here. So given favourable trading conditions, I would expect price to move up in response next week. You see volume was quite strong last week, considering it was still partially a holiday week last week. That's pretty good volume. That's buying support coming in. This market is poised to move higher given favourable trading conditions, which I expect may well occur. So look for price to move up next week. This is the gold price futures. You've got buying support in the background of this chart as well through here. Here was the breakout bar, breaking out above this level of previous support. The market came back and tested, broke out a second time on this bar. Now here's the breakdown line. You can see how that formed resistance here, and the market had to absorb its way through that level here. This is absorption. Now this bar is gapped up this week, so that's showing you some intent here, and that bar actually has a slightly longer tail, more like that. So you can see a little bit of intent's being shown. Now the zone of resistance above probably lasts up to this level here, I expect. So price is gapped up to the highs of the range. Now often when you see this happen, you'll see a test for supply in response, and then if the coast is clear, supply is low, and the trading conditions remain favourable, you see price push back out the top. Now this is the next level above, up here, and probably goes up to that level there. So that's your next range. So there may be a little bit of work done in this area here over the next week or so, absorbing supply and preparing for the next push higher if that's what's to come, and it appears as though it will. There's been intent shown on this bar, and now on this bar. So if the market continues to show you intent, that's the direction it's probably going to at least attempt to move in. So look for a week or two of trading within this zone here, absorbing supply. If it turns out there's very little supply there, it'll push out earlier, but there's likely to be some supply drawn out from this level here, and if so, it may take a week or so for the market to absorb that supply and prepare for a further push higher like this. Silver price futures also have some accumulation or buying support in the background. Back at this level here. Here was your breakout bar here, breaking out above this level. And that's where the breakdown line was. You've got another breakdown line coming through here. You can see that caused resistance here, and the market absorbed the supply here after breaking out, accelerated higher. And this is intent being shown again, similar to the gold market. Now, your next level is through here, probably up to there. That's your zone of resistance, but it's going to be a complex zone of resistance because there's another level here. There's a gap there, and gaps should be generally treated as a pivot in itself. So you would put another line there, like that, and that's probably an explanation as to why the market's going through this little absorption phase at the moment. It's likely it's going to have to continue doing that for a little while longer, perhaps something like that, where the price will do this as it absorbs its way through. It's not likely to gap and accelerate, or it's less likely, more likely to grind its way through, absorbing the supply as it's drawn out, or at least attempting to. Like crude price futures have not been a great chart to follow for a little while. It's been confusing at best. Recently, the market drifted lower. It appeared to be showing some support in the market, which failed again down here. This bar looked like it was going to fail. Lots of volume, but the next bar was up and price pushed up to the highs of this range. It's only a minor range. This is the more important range. This is the old lows of this trading range up here, which I expected would be quite well respected at the time, but price broke down again, but immediately responded higher, failed at this breakdown line, failed again at the breakdown line. Second attempt, it pushed lower, perhaps flushing out supply, we'll see. And this week, prices drifted lower again. A break below 70 would be significant. You've got previous support in the background at this level here. So you would expect support to be found in that level. That's through here. So we'll see how it goes. It'll be interesting to see if price just reverses next week. There is some chance this is a fakie and price reverses next week, does something like this. If it doesn't, it'll test for supply for sure. It'll come back and do that. And then we'll see what it does in response, perhaps later in the week. But because some strength was being shown here, and when price pushed lower on this bar, it immediately responded higher from this zone of previous support. I do wonder if this was a bit of a fakie this week, and it'll turn out to be a 2-bar reversal of some description. So just wait and see, and if it's not, look for a test for supply early in the week and a response later depending on how much supply is drawn out. Aussie dollar currency futures. Here's the level at 68, which has always been minor support. And here's the more important level at 70. And prices pushed above this level this week on an increase in volume, which may prove to be quite important in the future. If this is supported, a push up to 70 becomes much more likely. You may get an early test for supply. When I say that, and I say it a lot because it happens a lot, right in front of us, if you look here, this is what I'm talking about. When price overlaps and moves down within the range of these two previous bars, this is the market testing for supply and then responding higher later in the week. That's exactly what I talk about a lot. When price pulls back initially and then responds higher after not so much supply or not so much selling pressure has been found in the market. So I would expect once again, because these markets do it all the time, to test for supply early and then respond depending on how much supply has been drawn out. Bitcoin futures continue to move sideways above this 15,915 level. Let's just call it 16 ourselves. Here's the breakdown. It was pretty serious at the time, but the lows have been respected. Price continues to move sideways without breaking down any further, which is a significant move in itself, getting itself away from all this weakness. there's been two bars that are of interest. This one, down bar, high volume, price recovered after dipping lower, next bar was up. And this one here, where price dipped lower, is pretty shallow on this chart, but it's more significant on the daily chart. Price dipped lower, volume increased, next bar's up. This is some minor buying support coming into the market. And at some point, if that buying support is respected, you'll probably see price attempt to break out. This is the level above where I expect there'll be some issues from supply to the left. We'll see. This may be absorbing that at the time, and what's in here may actually have been sold. But we'll just have to wait and see as the market moves up. But it's looking more likely that the market has stabilised here. A breakdown below the low of this bar would be very poor and would be likely seeing price move down to around the 10,000 level. But at the moment, the market has remained above the 16,000 level, which I see as important. A clear break below it would be significant, and we'll just wait and see if there's enough strength being built up to push higher and at least attempt to challenge this level here is where I see the next breakout would be coming from if the market was strong enough. And just back to the US dollar index futures just quickly. And here's the important level currently. The last three bars have all been on low volume. I do note that nearly every other market we looked at trades some form of inverse to this market, and they all look like they want to go higher. That may suggest this market is going lower, and here's the likely level if it does so. That's going to be 101 and a quarter by the looks. So we'll take note of all these other markets. The E-mini did, the US Treasuries did, copper, gold, silver, light crude, all looked like they possibly wanted to continue higher and not necessarily lower. So that may be some form of indication that this market will continue lower and perhaps come down and test this 101 and a quarter level for strength. We'll just have to wait and see. But I would expect this level will almost certainly test for supply early next week. Then it will depend on how much supply is drawn out, how much selling pressure emerges, especially as volumes are likely to be back much closer to normal next week, much closer to average. So it's probably going to be a significant week and worth watching. Okay, thanks for your time. Hope that was worth watching. I'll be back next week. See ya.